I don't think it's likely that we'll be buying any great Chinese companies. The Chinese are very proud of their companies. They're proud of what they've accomplished. But you got to remember that in our way of thinking, all intelligent investment is value investment.
Charlie Munger has frequently stated that most of his financial success has resulted from a framework of mental tricks and models that have helped him avoid making bad decisions, rather than superior intelligence or insight. By employing those mental tricks in the realm of stock market investing, he has amassed a net worth of $2.4 billion and will be remembered as one of the greatest investors and thinkers of all time. Welcome back, guys. Hope you're doing well. In this video, we're gonna explain 7 things we learned about investing from Charlie Munger that have helped him make decisions and invest throughout his life. Before we start, make sure you hit the subscribe button with notifications turned on to get notified when we update videos like this one. Let's get into the video. Number 7. How to practice the multidisciplinary framework. Charlie highlights the benefits of having knowledge in multiple disciplines to avoid biased decisions. He notes that people can make mistakes when they have limited knowledge. However, he acknowledges that being multidisciplinary can irritate experts in a particular field who feel challenged by others. He also confesses to having experienced this reaction several times.
There's an old saying, that a man who carries only a hammer thinks everything else is a nail. You make a lot of wrong decisions if you don't have some command of all the disciplines.
Number 6. The concept of humility. In investing, you don't need to know everything. You just need to know a few things really well. And here's another mental trick for avoiding bad investments. Know your limits of competency so you can recognize when you are straying into the unknown territory.
You know the edge of your own competency.
Yes.
And you aren't arrogantly stepping over the boundary. Why do a couple of guys in a little place in Omaha do so much better than all these powerful minds in great institutions? And I said, well, I think Warren and I know the edge of our competency better than other people do. Warren frequently says, I'd rather deal with a guy with an IQ of 130 who thinks it's 125 than a guy with an IQ of 180 that thinks it's 200.
Number 5. Influence over corporate governance. Charlie agrees with the statement that indexing and passive investing have become counterproductive and out of control. He believes that it's not beneficial for the country to have only a few passive investors from elite schools dictating the proper governance of corporations. Buffett warns that if indexing becomes too dominant, around 90%, it may not function well. However, currently, indexing has worked well.
I think the guy's right. I think the thing is out of control and counterproductive. I don't think it's good for the country to have bright young men from Harvard or what else.
If the public opinion shifts over to the idea that it really is a good idea to let free people decide the fate of every company in corporate America.
Number 4. Expand your expertise. So, while Charlie Munger dislikes specialization, he recognized that it's the prudent thing to do. He was talking about specializing in a specific career, but this also applies to investing.
Specialization is the safest way up for most people. And for that reason, say surgeons know more and more about less and less, and that's what gets rewarded. And if you have a nasty fistula in your colon, you do not want a surgeon who's good at Proust or political science. It's understandable how the world rewards this specialization. I never liked it, and I loved picking up new ideas, being a great, passionate reader. And so I decided I'd make whatever living I could make doing what I like to do, which is sort of romping over a whole field. I do not recommend it to other people because the safe way up is to know a hell of a lot about something.
Number 3. Keep things simple. So ideally, you want a wonderful business run by a wonderful person. The most important aspect, however, is that the company is solid and straightforward, with a significant competitive advantage. As Charlie said, if it can't withstand a little mismanagement, it's not much of a business. So, while we prefer well-managed business above all, finding a straightforward, strong business that anyone can run is definitely the top priority.
We want to buy something that's intrinsically a very good business, meaning that an idiot could run it and it would do all right. And then we want that business, which an idiot could run successfully, to have a wonderful person in it running it. And if we have a wonderful business with a wonderful person running it, that really turns us on, and it works very well. And now we do make exceptions, but not many. And Warren sometimes says you have to choose good person or good business.
Number 2. Munger likes big oil reserves. So Charlie admires the oil industry and considers it a useful and reliable sector for investing. He personally knows petroleum engineers and refinery designers who are dependable and skilled. Charlie has a positive view of the Standard Oil and wishes the world worked as well as big oil companies.
I have a different view on this subject. I like having big reserves of oil. If I were running the benevolent despot of the United States, I would just leave most of the oil we have here, and I'd pay whatever the Arabs charge for their oil, and I'd pay it cheerfully and conserve my own. I think it's going to be very precious stuff over the next 200 years. And so nobody else has my view, so it doesn't bother me. I just think they're all wrong.
Number 1. Buying all bitcoins. So, Charlie avoids things that are stupid and evil, and it makes them look bad compared to others. And Bitcoin does all three. He believes that Bitcoin is stupid because it likely go to zero, even because it undermines the Federal Reserve System and the national currency system, and it makes the US look foolish compared to China. He also applauds China's communist leader for banning Bitcoin in China and criticizes the US for not doing the same.
Life, I try and avoid things that are stupid and evil and make me look bad in comparison with somebody else. And Bitcoin does all three. and in the first place, it's stupid because it's very likely to go to zero. The second place is evil because it undermines the Federal Reserve System and the national currency system, which we desperately need to maintain its integrity and government control and so on. And third, it makes us look foolish compared to the communist leader in China. He was smart enough to ban Bitcoin in China. And with all of our presumed advantages of civilization, we are a lot dumber than the communist leader in China.
To summarize, Charlie Munger is widely regarded as one of the most successful investors of all time. Over the years, he has shared a wealth of knowledge, and we have distilled some key takeaways from his investing philosophy. There's a lot we can learn from Munger's approach to investing, from the importance of having a margin of safety to the value of continuous learning and broadening one's mental models to the power of patience and long-term thinking. Finally, investing is a complex and ever-changing field, but by learning from Munger, we can become more knowledgeable and successful investors ourselves. That's all for today. We hope you liked this video. Let us know in the comments what other valuable investing tips Charlie Munger shares and how can they be applied to one's investment strategy. See you in the next video. Please subscribe to our channel, press the bell icon to get new updates.